All right. Welcome to this exclusive session of Dhan Ki Baat. And today we'll be talking about how to navigate financially in a time like this when COVID is bouncing back. You know, when COVID first happened last year, it was completely unexpected. And as it was gradually receding by the end of the year, a lot of people believe that it is not coming back, and somehow I had this thing in my gut feeling that feeling was telling me that the worst is yet to come. And I stood corrected almost a few weeks ago when we saw that COVID cases are bouncing back again. Now I also realized that this is something which is not a quick fix. It might take much longer than we thought, although there is vaccine now available. But it's going to take a lot of time to cover 130, 140 crore people to get vaccinated. And in all of this time, one good thing has happened is that economy has slowly come back to its feet. At the same time, a lot of people have lost their jobs because they have not been able to accustom themselves as per the new norms of the economy. A lot of people have had to work from home at reduced pay. A lot of businesses could not survive and they've already shut down. A lot of businesses now will not be able to survive the next wave because of the restrictions and lockdowns and curfews that are going to happen. The whole point what I'm trying to make is that although economy is recovering, but it's in a very, very shaky position. Our banking and financial system has become much, much more weaker as a result of all of this. A lot of family savings have been depleted, which they dived into in 2020, trying to recover from COVID. And when they finally thought everything is over, we know exactly what happened. But that's all on the negative side. Now, not I wouldn't even call it negative. This is the reality. This is what it is. Let's look on the brighter side. What can we do? Should we just accept the way things are, or should we do something about it? That is exactly what I was just thinking. For every single one I could impact, I could help with what I have, what I know, and how one can use even bad times to their benefit. That is the reason why we are doing this live session on YouTube, just for your benefit. So, what are we going to talk about today? We'll be talking about the current state of the economy, and what are the potential goods and bads. So what are the potential opportunities that will come up as COVID happens again, and what will potentially go down because of COVID, and how you can use that to the best of your benefit. Because you would agree to me when I say this, that life always happens to us. It's depending on us. We want to make good out of it or bad out of it. So we are on the brighter side. So we obviously would like to, whatever is happening, use it to the best of our benefit to get most out of it. That is why we're going to discuss what we're going to discuss today. So let's not waste any more minute. I want to give you a very quick introduction. If you don't know me, haven't met me, or you haven't had the, I haven't had the privilege of knowing you. So let's get to know each other a little bit. I would like to give my introduction by letting you know that my name is Arpit Arora. You already would know that. I'm India's leading personal finance expert and passive income coach. I am working on a mission in my life to help more than 1 million Indians to live a life which is completely free of money worries, so that they get inspired to follow their passion and they're able to live within a peace and joy. Now, on this quest of doing all of this, I come with a lot of extensive background into finance. I've spent more than 13 years in the financial industry. I've spent my time in UK and India. I've worked with Royal Bank of Scotland. I've been awarded by the Philip Kotler Award for Excellence as a Financial Coach. I've been felicitated by a PhD Chamber of Commerce. I'm also a Bada Business professor on Dr. Vivek Bindra's portal. And the reason why I'm telling you all of this is to let you know that all of this was created, all of this effort was put in to just work on my mission, because the more I put into myself, I believe the more I'm able to give to you. And today I want to give you, I rather want to make you ready for what is going to happen next. So let's get started on that. So let's first talk about the psychology or the approach one should take uh, when the rebound of COVID is happening. We're already in it as we speak. So should you play the same way the first time COVID happened last year around the same time? The answer to that is a no. Why? Because understand this, the dynamics of the way by which or through which people are responding to COVID has changed. So your approach to tackling COVID, at least from the perspective of investment and managing money, should completely be different. Not the same way as it was the last time. So how is it different? How different asset classes will likely perform? What should you do on every asset class? And how to make the most of this is what I want to discuss with you next. So let's get started. First, I want to talk about real estate because 80% of the money of people is stuck here. So, what is going to happen in different sectors of real estate? I believe that commercial real estate, which people predominantly use for rentals, that is going to face a lot of downward pressure because more and more companies have decided not to go back to offices because they've already benefited from sitting from home and they realize that they do not need to renew their lease. So more businesses will now not be going to offices. Most importantly, a lot of people who are now wanting to start an office are not starting an office because of the same scenario. And most importantly, businesses which finally thought they will now go back to office have also decided not to do so. So this is going to put a lot of pressure on the commercial real estate, which would mean that the rental income will likely drop because there'll be more options available. The price of the property will drop, and the people who are the property owners will now face a lot of cash crunch or income crunch because of the same. That's one thing. Second thing is residential. So we've seen the last year has done actually well for residential because the prices of the property fell down and more people who were just waiting to buy a property just grabbed on that opportunity. So that temporarily increased the turnover or the demand of residential property. But at the same time, one more factor has come in, which I believe will continue to increase the price and demand of a certain type of residential property, which is the affordable segment. So affordable segment is those set of property which is under the price of 50 lakh rupees. Now this segment I believe will continue to boom because of the government's taxation that's using section 24 and 80EE. You are able to almost, not almost, in fact, up to 3.5 lakh rupees of the interest that you would pay if you take a home loan on an affordable property, all of that will be set off and you won't have to pay tax on that. So assuming a 50 lakh property on which you're paying 7% of home loan, that amounts to 3.5 lakh rupees. And that 3.5 lakh rupees is now exempted from, you don't have to pay any income tax on that. So that's a great initiative. And I believe that this really, and because of the low interest rates on home loans, I believe that this sector will continue to boom, whereas the other set of residential, I believe, will either remain sideways or negative for that matter. Talking about industrial and plots, I believe both will also continue to face a lot of pressure, downward pressure, because these are mostly in high value or do not create any income like plots. So this segment also will not do very well, especially industrial, because the size of the property is very big. Industries are not really looking to expand right now. People are looking to sustain where they are and very cautious with their growth projects. So from that perspective, this will not do well. But there's one certain segment which I believe is going to thrive, absolutely thrive. Do you want to know which segment is going to thrive in real estate even more than the residential? Any guesses? Well, I'll tell you, it is warehousing. I believe warehousing is going to do phenomenally well because more people sitting at home need more services coming to them. We've seen how Amazon, Big Basket, and all of these way of e-commerce has really penetrated India. And I believe more and more of this, I mean, this is only the beginning. They are yet to go into B towns and C towns. So more of the warehousing opportunities will come up and warehousing will continue to do phenomenally, I believe so. And one can always invest into warehousing, either build their own or invest into a already pre-leased warehouse to be able to create a really good sort of income or rental for them, which is something one should always do. Talking about equity, now this is one place that people who stuck to it made a lot of money. People who recently invested made a lot of money. Now, I want you to note that from the bottoms of, when we talk about Nifty as a broad benchmark index, from the bottoms of say 8,000, 7,700 per se, the price went up to 15,500, which is doubled. So from the troughs to the peaks, we have seen 100% return in the broad benchmark indexes. Stocks have also done phenomenally well. Now, this has been great and totally unexpected because everyone was expecting the price of the stocks and indexes will go down even further, which it did not. Rather, it went to an all-time high. So, is that something you can expect happening in 2021 all the way through to 2022? I believe no. I believe that the stock markets, there is not enough earning in the market. The price is already inflated at a 20-year high, something known as a PE ratio. So I believe that markets are way overvalued. They might still continue their momentum of upwards, but I don't believe they will sustainably be able to grow like that. One very big sharp correction is likely going to happen. So the strategy for a person should be in accordance to that only. And one should not be putting all of their money into equity, hoping it will continue to do the same way as it done in the last year. That would be a big mistake if you do. On the other end, if you look at certain sectors in the equity markets, I believe IT, pharma, and FMCG will continue to do fairly better than the rest of the stock market because these sectors are very, very pro the scenario of COVID, and they will definitely help the people navigating through these COVID times. So I believe that these sectors either will be resilient to a fall or will continue to do better than the rest of the broad indexes. So that's one place which looks very lucrative. When we talk about the debt market, now there's one thing I want to talk about. What is debt market? Debt market is the place where you invest your money and you get fixed interest. Now, typically how people do this is they keep money in the bank, they invest in government small saving schemes. If you remember, government recently made a major cut in the small saving scheme this year and rolled it back. Last year, they did make a big cut and they did not roll it back. Safe FD investors who are savers have continuously lost money in the last 4 or 5 years, rather from 2014, because the interest rates have categorically reduced from 8% to almost 5% now. And there have been more restrictions on the e-provident fund, which is now capped at 2.5 lakhs. Anything more than that, you'll have to pay full taxes. PPF interest rates have come down, senior citizen has come down, post office, everything. So looking at that perspective, I thoroughly believe that savers will continue to lose money, not just because of low rate of interest, but also because of high rate of inflation. October 2017, 2020, the inflation was at 7.61%. Now that's very, very high. So not only are you losing money in less rate of return, you're also having to pay full taxes on that. People falling in 30% tax have to pay full tax on this, at least on FDs. Or you have to wait till the maturity of PPF, which is 15 years, and EPF, which is until your retirement. And all of this is like really hard to, either it doesn't create income for you or you have to wait for a very long time. And even then, for holding on to 15, 20 years, 10 years, the return is not that great. So I don't believe this would be the right approach. One should be looking at, smarter, better ways of investing. In debt, there are so many other ways to invest through ETFs of debt, through debt funds, which can give you more efficiency of taxes and also higher rate of return. Up to 9% is what you can achieve if you invest in certain ways of investing into debt. So that is also something that is available for you to do if you seek to do better and not sit and hatch your FDs giving you negative return. So one should really move out of that because it's going to give you even more pain and suffering in the years to come, something that is already categorically happening since 2014. Now, let's talk about gold, which is something that India loves the most. So gold being a precious metal like silver and gold, both of these assets, I believe, will do well because these are typically a hedged against the shocks of the economy. And if COVID comes back and it does affect the economy, these assets will continue to do well. These assets also, in certain times, come as a very good alternate to investing against the inflation, which is currently standing at about 6-7%. So I believe that gold will continue to do well in the next 1 to 2 years, as it has in the last 1 to 2 years. One should really look into investing into digital ways, not physical ways of investing into gold. There are a lot of options available today through which one can do that. Now, last and most importantly, something that everyone needs. So I've told you in broad understanding of what the overall understanding of what the next 1 year can be for you. What will do well, what will not do well, where should you invest, where should you avoid. But all of that is just generic. What you need is a customized strategy through which you can implement all of these things in such a way that it suits your needs, your circumstances, your goals, your cash flows, your taxation, and all of those things. So that is where I really want to bring your focus to, because just knowing all of this isn't enough. You need to create a strategy and an action plan which can help you navigate through these times, taking the right decision at the right time, so that you're paying less in taxes, so that you're making more in returns, so that you're taking less in risk, so that you are able to achieve your goals, so that you are less affected because of what is happening in the economy, because our income, almost every one of us has been affected because of COVID. Our incomes have either been stagnant or reducing, or the prospect of more earning in the next year is affected. I believe 95% or more of Indian population or global population is going through the same problem. So what we need is a customized strategy which can help us navigate these times and help us achieve our goals and reduce our dependency on that one single source of income, our business, a job, or profession, because that is definitely already affected and will likely so in the next year as well. So I would like to, if you seek a solution on these lines, you definitely can use uh, the ideas that I've given you so far. But if you seek a more customized solution, a more hand-holded solution, I'm actually doing a program next week, starting from Monday to Thursday. It's a 4-week program called Mission Financial Nirvana Online. So in this program, I teach you the mindset that you would need to navigate these times, the skill set that you would need on every single asset class, where to invest, how to invest, tutorials, and the best ways of undoing your mistakes, how to plan for the next investment, creating strategies and action plan. All of that is something that we're doing in this course. So if you feel that you need some sort of assistance, if you feel that you need some sort of support, I'm going to share the link of that page. You can go through that and speak to our team. If you seek, you can fill in your details in the interest form and we can contact you. Go through that and see if that can help you to achieve what you want to achieve. If not, definitely use the material that I've given you so far. All of this will really help you to at least be better off than where you are and what you had already planned or originally planned for the next 1 year. Because everyone was under the impression that COVID is over, but it clearly isn't. So we need to be smarter, wiser. And if you haven't been smart in the last year, at least don't sit on waiting for a miracle to happen. Take charge of your finances. If you don't do this now, like, you don't get opportunities twice, but somehow it is coming to you again. COVID is as an opportunity is coming to you again, and you'd be very shocked when I tell you this, that we made more money than any financial year in the last 5 years than that what we made in the last financial year because of COVID. So we use the negative side of COVID to our benefit. Something you can also do so. Once you learn, once you update and upgrade your knowledge and create a strategy and action plan for you with the support of me and my team, so that you can get the results for yourself. So I really hope you enjoyed this short session, 20-minute session that we had. I hope it gave you new ideas, new insight, and definitely helps you to navigate better the next financial year with the COVID coming back and economy struggling against recovering from this entire process. I really hope for your well-being, your best of health, your best of wealth, and most importantly, peace and abundance at home. So please take care of yourself, be safe, be wise with your money. And if you ever feel that you are in whatever sort of need in learning more about money, don't hesitate to ask the wise guy. Take care of yourself. God bless you, and see you very, very soon.